Yeah, I kind of want to short Costco and Walmart. Walmart's down 4%. Whew, look at this chart. I'm not a chart guy, but that's crazy. I mean, I don't think this is about tariffs anymore. I think people understand that tariffs are not really a thing. I mean, the market's made it pretty clear that tariffs are a bad idea, and I think pretty sure the government's listening. You can buy IonQ 17.5 puts that literally expire in a week. Cost you 70 cents. So your break even is 1680, which is still 10% away. Pretty wild move there. You know, I sort of think of $10 for some reason as like a rest stop for IonQ, but really the long-term price was more like 8. Go back even further. Yeah, I mean 6, 7, 8 was kind of the price, but you know, you could also see 3 or 4. Christmas tree chart. It's a Christmas tree chart with a second gift. Second gift here. On the daily chart, there's been almost no up days for IonQ in about a month. A few up days, very small at that. Let me see if I change this chart. Just click up there. Same sort of chart, more or less, for rigetti. A little more exaggerated, but I mean, if it's not Jover, I don't know when it's going to be Jover. Warren Buffett very famously said, fortunes are lost at the end of a quick pulse. I'm sure he didn't come up with that either, but still pretty telling and useful saying. Just going through the deltas as you go more out of the money, they drop. So let's see, 82, 72, 60. And you multiply the delta by your notional to get your delta adjusted exposure. 47, 35, 25. Finally, my rigetti 10 calls are very out of the money, 17% delta. And you get a total delta amount. You see, another strategy is to just add up the delta shares. It's a lot easier. Yeah, the dollar amount doesn't really matter. It's the share amount. So just so you guys know what kind of I'm talking about here. Short position of this much rigetti common stock. So that's the amount of shares short. Okay. The total amount of call options I own would be this amount, which is more. This is on an as converted basis, right? So you'd actually be long in this case, but options that are out of the money are not worth the full amount. Deep in the money options are almost like common stock. In fact, common stock, you could kind of think of it as a zero call, a strike, a call option with a zero strike. Does that make sense? So this is no delta adjustment. Now, if you have a $1 call that you're short, you don't even need to adjust that. That's going to be 100% delta practically, 99.5, right? So as you go through all the options you have, you adjust them. Now, if you own rigetti 15 calls as a hedge, are you long rigetti? Not really. You know, the 15 calls are very unlikely to ever be in the money. So, you know, they might have a 1% delta. Well, it depends on whether you have a call or a put. So the lower the strike price, the higher the delta on a call option, and vice versa for a put. So my delta adjusted, you can see here, is a much different number. It's like half almost. And so this is the delta adjusted number. This is the number I care about, right? This number is kind of irrelevant because you can buy all the 15 and 20 calls you want for rigetti and you'll be hedging out some of your downside if you're short. But you're not gonna, you much rather, if the stock rockets, you much rather have a lower strike price because you lose all the money until that strike price, say 15. That's when your protection starts kicking in. That's my position on rigetti. I'm net short, 120,000 shares. But if the price goes down, what's interesting is the delta on the short will never change. It'll always be 100% delta. But as the underlying price changes, this delta will change as well. If the underlier drops, the value of the of the hedges drops as well, because the delta will go out of the money. As it rises, unfortunately, it'll also rise all the way up to the potential of 442. You know, you would lose money on these, and then you would gain some amount of money on these, depending on how much it runs. There's also time value and time decay, so keep that in mind. All right, so that's sort of what's going on there. I do think I should increase my position a little bit. But let me do the 𝗂𝗏 equivalent. I might want to increase it more on 𝗂𝗏 because I was a little bit, more into rigetti. But, let me, 88 is the next delta. So I'll assume it's 93, 90, 88. 93, 90, 88. You can, the deltas you can kind of almost do in your head. A good rule of thumb is if you look at the at-the-monies, which for 𝗂𝗏 are 19, the delta is usually around 50 cents. So depends on the applied vol. All right, so 91, 88, 84. Hold these open, and we're working pretty hard on a good options product for 𝗏𝗏𝗘, so you'll be able to see those soon. 93, 91, nope, it's 93, 87, 78. 93, 87, 78. Now I need the 18 calls and the 19 calls, which I'm also long. Not bullish, just long them. 67 and 53. And then the rest of the calls are pretty out of the money. So protect yourself with those out of the money options. 34, they're not expensive often. They will eat into your return if the stock doesn't do anything though. And the most out of the money I own on 𝗂𝗏 is the 22 calls, which are 20% delta. So by the way, what is delta anyway? Well, delta is the amount of the expected change in the option for every dollar of the expected change in the underlier. So if you own a $1 call option on a $50 stock, if the stock goes up $1, your $49 call option will also go up $1. But at the money, your call will go up 50 cents for every dollar the stock goes. Out of the money, it might only go up 10 or 20 cents, hence 10 or 20% delta. So just keep all that in mind. All right, of course, this tells me something a little alarming, which is that I'm net long 𝗂𝗏, this is why I was doing this analysis. I was sitting here, what's going on here? Now that can't be true that I'm net long 𝗂𝗏, which is not what I want to hear, but I don't think that's right. Something must be wrong here. That's the problem with these complicated positions, is you kind of want to make sure that you have the position you think you have. And there are things that the systems have that will show you it correctly. Different systems will report you to delta adjusted exposure and things like that, but it takes a couple of clicks to fix it anyway, right? I do sell options sometimes. I mean, I always say the smarter move is to sell premium. One of the problems is, you're net short, and then as the price comes down, you kind of want to buy cheaper calls, but you also simultaneously, you do have to magnify your position. So it's kind of one of these things where you don't want to get tied off the reference price, and you want to be able to use a little of vol to improve your reference prices so that you capture a little bit of spread, and that spread is used to pay your theta. And usually I just do it kind of eyeball it, but sometimes it can get away from you a little. Now I'm catching up, and I'm probably having the reverse problem where my reference pricing and all that is getting, but some lose some. One thing I would say as a trader you never really want to do is press the market too hard, because in the old days you sort of could, because the market makers just weren't what they are today. But today they really are shock absorbers for the system. And they always have been to some extent. But in the old days, if you could poke a stock to see where the supply and demand was, and you can get a pretty good feel as a trader what's going on. You talk to Wall Street and stuff like that. All right, we are going to start up our market maker, see how that goes. All right, the orders are being spammed as we speak. I don't know if exactly it'll... Oh, interesting. Okay, so it's dynamically changing the buys and sells. Here's NVIDIA, Tesla. It looks like it cancels the orders. I don't know if you guys can see this. Short Apple, Tesla, NVIDIA, Google. Yeah, just sort of going on its own here. I'm gonna let it do its thing, Gotta let it breathe. So far, it just wants to short things. I should also make it delta, sort of delta hedge and beta hedge, at least delta hedge. Buy an equivalent amount of beta adjusted exposure because if you post all your short orders, yeah, I'm just building a short position apparently. Should we turn it up a few notches? It looks like it's somewhat well behaved. Maybe we put on more shares and more stocks. What do you guys think? And we can do like make a screen with all the positions that it's doing. First report here, we sold 5 shares. We bought 5 shares in NVIDIA for 107.82 and we sold it for 107.80. All right, Google. Okay, Google, we made 12 cents. Tesla, man, it's going too fast. I can't even pay attention. It's just whipping it, flipping it. Okay, so year-over-year revenue growth for Procter is a bad JavaScript here, up 2%. E723. So yeah, $440 billion company, Procter Gamble. I remember when they were more like a 200 or 150. You know, MBAs all want to work at Procter Gamble. Legendary American business company. Legendary American business, I should say. So 9 billion free cash flow for the year. Or no, that's half a year. So that's 7 billion free cash flow. Last year was 8. So 7 or 8, either 14 or 16 billion free cash flow. No growth. Another dog stock, 26 times earnings for no growth. Come on, man. Can't keep doing this. This stock should be 12 times earnings. Beauty, we got Head and Shoulders, Herbal Essences and Pantene. So that's hair care and skin and personal care. So they got Olay, Old Spice, that's Procter Gamble, Safeguard Secret. So they don't do much in the skincare. Neutrogena kills them skincare. All right, grooming. You got Gillette. I remember when they bought Gillette, that was really controversial. It was all toothpaste, Crest. They also have Metamucil, Vicks, Pepto-Bismol, Fabric, and Home Care. This is the biggest division. Downy, Gain, and Tide. Tide Pods, that should be in food. Cascade, Dawn, Febreze. All right, Baby, Feminine. It's obviously a pretty big franchise, the number 2 franchise. They have Tampax, Always, Bounty, no growth anywhere to be found. It's a bond, you know, but it's you're paying bond safety for equity. Yeah, pretty brutal picture over at Procter & Gamble. I mean, no growth to speak of. No operating margin improvement either for that. Again, things may change. You know, when we look at backwards looking numbers, we are not looking at the future by definition. So, you know, to do a better job, you know, we really have to dive in and understand what's going on from a deeper level. But just off the bat, it looks like 𝗕𝗏𝗄𝗎, as long as things don't change, that's going to be kind of what we're looking at. Yeah, I mean, they basically just keep doing buybacks. Certainly adds earnings per share. Market down 2.9%. Again, a little bit of a rally there. Amazon now profitable for us. We'll kick it out. The TWS system I have here very slow because we've made thousands of trades, which typically does not have to deal with. So, all right, we're out of Amazon. How about Robinhood? We're still down on Robinhood. Still down on MicroStrategy. SEC charges former AKADIA guy for insider trading. Interesting. It's a well-known drug company. Wonder who these guys are. Let's see this one. Momentum Advisors, Alan Boomer and Tiffany Hawkins. Company debit cards, vacations, clothing, personal expenses. Hawkins concealed her misconduct, and Boomer failed to supervise. Tiffany shouldn't have done that. Tiffany, aka Tiffany Taylor Watson. Whoa. She have 2 names? I want to see the new AKADIA thing. Litigation release. George N. Demos. Negative news from the FDA. He avoided 1.3 million of losses. Woof. Okay, S&P rallied significantly here. He only down 2.6% now. Pretty nice bounce. but not helping a lot of the stocks that were short too much. Got a major memory leak here on this program, so. Novo down 9% still. Market does not like that CAGR data. Weight loss fairly weak, although it would extend the patent quite a bit. Market now only down 2.57%. Almost 100 basis point rally. Our short's not rallying too much. Not rallying too much at all. Let's take a look at our aborted quant portfolio. Sort of halfway. Pulled the plug on it. Hood almost profitable. We exited a lot of stuff here. MicroStrategy rocketed back. Portfolio only down $800 now. So pretty nice return there. Actually, Tesla's one of the weakest links there. Price is moving wildly as we speak. SPY only down 2.6%. I'd almost, what do you guys think? Should I just take the L on the $1,400? We went from a very expensive dinner to a decent date. Nah, we need MicroStrategy to come all the way back. Gotta be long something. Might as well be long MicroStrategy. Oh man. Right? Exactly. Fun Coupons knows. It was a $4,000 or $5,000 loss. Now it's just a $1,400 loss. We made grilled cheese and eat at home tonight. This is day one of our somewhat systematic trading strategy. See how day two goes tomorrow. Yeah, the television people are so stupid. I believe in the revolution, that's why I'm long. I'm long strategy. I got some strategy in my portfolio. I got 400 shares. 400 or 500 shares riding on Sailor. I'm doing my part to contribute in the revolution known as Bitcoin. I'm gonna laugh at all you haters once my MicroStrategy position turns green, cha-ching. That's the sound of money, baby. They said that a girl I dated Sailor. Oh, it's true, and I'm afraid to ask her. I don't talk to her anymore. I blocked her. I ain't trying to find out. I wouldn't buy SPY because it's expensive. Just because you can't pick stocks doesn't mean you should buy SPY. That's like saying, you know, it's just two non-related things. You don't have to invest. Nobody says you have to invest. SPY only down 2.5%. Mega rally, 1% off the bottom. Don't worry, we'll just sell it tomorrow. You know, sometimes Procter Gamble will sell product lines or acquire products. You really got to make sure you understand the organic growth. When it's so close to zero, you want to make sure you're not missing something. If they're growing 5%, that's a very different value for the company than if they're growing 0%. As you can see here, it was 6,310, -1, 5 quarters in a row of negative second derivative, and finally one positive second derivative and positive first derivative. But you know, this is the kind of company where if you say, look, Martin, all the mumbo jumbo you do all day, I don't understand any of it. I got to start simple, really slowly. This is the kind of company you want to look at. What is Procter & Gamble worth? If you can't figure that out, you don't belong in the markets, you don't belong in finance, find something else to do. Go be a dental hygienist or something. If you want to take it easy, step by step, just look at this. I'm going to upload it to GitHub. You just go to my GitHub. You could even search, Google search Martin Shkreli GitHub, but it's github.com/Martin Shkreli/models, and download pg.xlsx. It's not up there right now, but it will be in 10 minutes or something like that. If not, check back tomorrow. Download that, see if you can understand it, make your own, see if you could recreate it yourself. And then, you know, kind of work from there to see if you can't figure out what could Procter & Gamble be worth. And I'm going to, because I said that, I'm going to pay a little extra attention here and make sure you can follow it. Okay, so actually, if you look at it from an annual perspective, 2% revenue growth and 4% revenue growth. Oh, okay, I'm forecasting it a little. I shouldn't do that. They've said they're going to do like 3% growth, so I'll just do that. Okay. That's a little, maybe more likely. Okay. So 2% annual growth. There's taxes. We're going to add tax rate down here. We have a balance sheet. We didn't do a balance sheet. Okay, we'll do a cash flow statement real quick too. We're just going to do cash flow from operations. But the tax rate's 20-something%. I'm sure making Bernie furious. Bernie Sanders here, listen, how are they paying the 20% taxes?
I'd pay 50% taxes because I'm a millionaire. They're paying 20% taxes. Ridiculous. Make them pay more. Make them pay like me because I'm a millionaire. I'm from Brooklyn many years. All right, Procter Gamble at maturity, -1%. What is their weighted cost of capital? What should we discount it by? Actually going to discount it by a really low number of 6%, which we don't ever use for pharma. But think about these assets. I mean, this is like the most indestructible company on planet Earth. You got Gillette, Head and Shoulders, Old Spice, Crest, Tide, Tampax. These are products people are going to be using 100 years from now. That's why we love it. We love it. 100 years of cash flow, because it'll still be here 100 years from now, right? Yeah, it will. It will. It'll be here after you're gone. Think about that. Oh no, not that. Oh my God. If Procter never grows again, this share price is downright diabolical. Well, it's 178 right now. I'm not saying it might go down. I'm just saying, well, I must have made a mistake, because let's say instead of declining, it starts increasing. Okay, now we're back, right? All they have to do is increase cash flow 3% forever. I mean, theoretically, it's doable, right? Because just on inflation, and this is where like the philosophy of investing comes to play, where like you got to think about like, is 𝗓𝗏, how would 𝗓𝗏 value this? How would a scientist, like a cash flow scientist, think about this? Like Buffett. I mean, these are basically undeniable, right? Undeniably some of the safest cash flows that exist. But what do you want to pay for that? You gotta pay a growth multiple? No, I can't do that. Right now you are paying a growth multiple. Here's the annual. Let's just skip to the bottom here. But here's what we're looking for. Fiscal year ended, cash flow. This was 19,846 and 3322 for CapEx. 16,848 here and 3062 here. So cash flow was 17 billion for fiscal 24 and 14 billion, which is sort of approximated here. But to be really sure, let's do a couple more. Let's look at fiscal 2022. I mean, again, it is one of the best managed companies in the world. I mean, people dream of becoming the CEO of Procter & Gamble. People from business, the business world, business school. You may not dream of it, but that'd be a dream come true for almost everybody with an MBA. And okay, so cash flow didn't really grow that year, but let's do one more. Here it is. Okay, so you can see this like plotting growth, right? Really plotting. 76,118, 37,108, 4, minus 502 plus 45 plus 86, 3263 plus 46, 2601 shares. Again, I noticed the share count continuously declining here, but look at the revenue growth, 5, 2, 2, and 2. But again, that's more than 0, and theoretically, Procter is in the most mature phase it could be in. Some of these brands are a zillion years old. So why shouldn't you say it's in maturity now? And arguably cash flow is growing at more than 2%. Let's take a look. That's why we're doing this actually. Probably not good news here. Oh, well, there was the stay-at-home COVID stuff, right? So maybe that was the artificial boom there. Do we have to now go back to pre-COVID? That's annoying. All right, there's the 12 months, and you saw there's some nice growth there. I'm gonna look one more year just because I wanna make sure I really lapse COVID and really understand what happened to the company around COVID. I mean, after all, their toilet paper sales probably. Charmin, people were buying lots of Charmin, they're never gonna use it. It's all right, I need it. So there was 7% revenue growth there, not bad at all. But cash flow is kind of more important, I would say. And there's 17,403 and 3073. So we can even do a rate, equals rate for any of you Excel pros. Equals rate is elite. Using equals rate, your special, did they buy somebody? Again, that's the problem, is that you can't really do this unless you go through it a little more carefully, because you might be, if they bought somebody, that growth, that 7% growth might actually have been 1% growth. So you have to strip out that inorganic growth at 5% growth. And you want to make sure there's no acquisition sneaking in there that make you think, oh, it was great growth, but turns out. And then the opposite, you don't want to penalize the company if they divested something. So anyway, here's the annual year-over-year cash flow change. So it's a lot different, right? It's a lot different. And there's 5 periods here, right? 1, 2, 3, 4, 5. So we're going to do equals rate, 5, no payment, negative, well, it's supposed to be negative here and positive there. And we have a 7% cash flow increase over the last 6 years. If we put that in here, it's a $1,200. So it's $200 right now. So I don't think they're going to grow at 7% a year forever. That would be quite a feat. Although that's the whole point of the Buffett theory, is that if you can grow sales 2 or 3% and you have a good business with good capital returns, you might be able to grow 7% cash flow for quite a perpetuity, in which case you will earn a huge amount of dividends and so forth.